Let's start with what actually matters here. On January 22nd, Hedera didn't just land any partnership, they became an official partner of both the McLaren Formula One team and the Aero McLaren IndyCar team. If you don't follow racing, understand this. McLaren isn't some mid-tier operation. They're one of the most storied franchises in motorsport. Formula One teams operate on budgets that dwarf most corporations. IndyCar teams pull in audiences across North America and globally. This isn't a jersey sponsorship deal. This is infrastructure-level integration. Here's what makes it genuinely significant. Hedera is building digital collectibles and fan experiences on their network. We're talking free-to-claim NFTs designed for a global audience, no gas fees to the moon, no gatekeeping, just scalable engagement that actually works at consumer scale. Millions of casual sports fans, people who've never touched crypto, are about to interact with distributed ledger technology without even realizing it. That's how you onboard the next wave of adoption. That's how you move from crypto Twitter speculation to real-world utility. The partnership literally screams precision, performance, and innovation. That's not marketing fluff. That's the actual DNA of both organizations. From an adoption standpoint, from a credibility standpoint, this should have been the kind of announcement that sparked 3 consecutive green candles. But it didn't. And that's the problem we need to solve right now. Here's where it gets uncomfortable. Despite this partnership being live, Hbar's technical structure is broken. According to our technical analysis tracking, a critical support zone flipped into resistance. That's not just a minor pullback, that's a reversal of market structure. When support becomes resistance, it means the buyers who were defending that level got overwhelmed. The sellers won, and now that former safe zone is literally weighing down the price. As long as Hbar remains capped below that flipped support turned resistance, the broader bearish structure doesn't just stay intact, it amplifies. Let me be specific about what we're looking at here. In early January, Hbar tagged 13 cents and got rejected, like, really violently. Then, by mid-month, the selling just accelerated. That bounce attempt? Yeah, it failed spectacularly. Now we're seeing a pattern of lower highs and lower lows. That's pretty much textbook downtrend mechanics. This isn't consolidation, it's systematic weakness, plain and simple. The potential downside targets? Well, analysts are calling 8 cents as the next meaningful support level. In a more aggressive breakdown scenario, I'm not saying it's guaranteed, but the chart is technically capable of printing it, we could see 5 cents. That's a 60% drop from current levels. I know that sounds harsh, but when support flips to resistance, the market gets genuinely dangerous for longs until the structure actually repairs itself. Let's check the indicators because they're definitely telling a story that matters. The MACD is still trading below the zero line, no bullish crossover, no momentum surge, nothing at all. The RSI lifted off oversold conditions, which is fine, it happens, but it's still well below 50, so we're not in bullish territory yet. That 50 mark is kind of a psychological midline. Above it, and you're theoretically in bullish momentum. Below it, you're in the range where consolidation happens, or, honestly, where more selling pressure can start to emerge. The combination of these signals, it's pointing to consolidation within a downtrend, not a reversal out of it. That's incredibly important to distinguish. Consolidation in a downtrend often means you're gathering energy for the next leg down, not the recovery higher. Some analysts are saying the 0.08 to 0.10 zone could hold demand, and they're not wrong, but that demand needs to show up with conviction. Right now, buying has been anemic at best. Hbar is stuck in the worst possible scenario. Fundamentals improving while technicals deteriorate. The partnership is real, the use case is compelling, the global visibility just spiked, but none of that has translated into buying pressure at scale. That suggests a few possibilities. First, the retail and institutional buyers who would typically chase this narrative are skeptical. Maybe they're waiting for price to stabilize. Maybe they're watching the chart rejection and thinking, I'll buy it lower. Second, macro conditions remain fragile. Altcoins are still under scrutiny. Risk appetite globally hasn't fully returned. One positive announcement doesn't move the needle when the broader environment is cautious. Third, and this is critical, there's a lag between when fundamental catalysts emerge and when technical structure repairs itself. Hedera did something incredible on January 22nd, but the chart didn't get the memo. The chart is operating on its own timeline. Right now, if you're watching this and you're holding Hbar, you need to be brutally honest about your risk tolerance. If this breakdown continues, losses will accelerate. If you're considering buying, you're either a conviction player betting on the long-term story, Or you're waiting for that 8 cents confirmation. Either way, smash that like button right now. It signals to YouTube that this analysis matters, and it helps us push crypto education to more people who need it. And if you haven't subscribed yet, hit that subscribe button and turn on notifications. When Hbar finally reverses, you want to know immediately. Let's keep going. Watch for a few key catalysts. The 10 cents zone. If Hbar bounces here with conviction and holds above it for multiple candles, we could see a test of the flipped support turned resistance around 12 to 13 cents. That would be your first signal that structure is repairing. Fan engagement metric. Real data from the McLaren partnership matters. Are millions of people actually claiming those digital collectibles? Are they actually staying engaged? That kind of real-world traction could trigger a narrative shift that eventually forces the chart higher. Macro conditions. If Bitcoin holds strength and alt season fully activates, Hbar could piggyback on broader momentum. But right now, we're waiting for that confirmation. Look, here's what I want you to understand. Hedera just executed one of the most strategic partnership moves we've seen in crypto. But charts don't care about partnerships. Charts only care about supply and demand, psychology, and structure. Right now, demand hasn't materialized. The structure is broken. Until that changes, Hbar remains dangerous territory for aggressive longs. The long-term story? Absolutely intact. McLaren is real. Digital collectibles at scale is the future. But patience is not just a virtue here. It's a survival strategy. Thanks for watching TJ Crypto World. If this breakdown of Hedera helped you understand why fundamentals and technicals can diverge so dramatically, please drop a comment below. What's your take? Are you accumulating Hbar or are you waiting for that lower bounce? And before you leave, check out our latest video on identifying reversal patterns before they happen. The link is pinned in the comments. Stay sharp, stay skeptical, and I'll see you in the next one. Peace.